Alright guys, welcome back to Wealth and Travel on a Dime. And today we're going to be talking about options as a side hustle. Now, with this in mind, I do want to mention that today's video is sponsored by Connecten Internet. More on that later. And also I want to say right off the bat, the most important thing I want you to take away from the beginning of this video, because this is not a tutorial, but is that you do not need to pay anyone for their course, for their book, or anything else to learn how to do this. Simply get on YouTube and you can search 3 terms: covered calls, selling, puts, selling puts, the wheel strategy. Those 3 search terms are all you need to get the information to do this. Do not pay people to teach you how to do this. There's so many people trying to coach you. You don't need to do that. It will actually cut into your profits by doing this. Now, with that said, I also want to eliminate a lot of the problems you're going to have as far as losing money doing this. And it's real simple. Because when you open up an options chain, say on Robinhood, at the top there's going to be buy puts, sell puts, buy calls, sell calls. No matter what you do, you are always selling. It may not even be what you think in your head, but you're always selling. When you're selling, you're the house. When you're buying, your odds are very low, so you are the gambler at that point. Now, there is strategies where you use both. I'm just trying to stick to the safer, higher probability of you winning, and that's selling. So, when we started this month, it was the 7th, and then we ran to the 7th. Okay, and Missy laid all this out in a spreadsheet. She's going to do a video of where she got the spreadsheet, how she uses it to keep track of all this stuff. Like I said, this is not a tutorial. I'm not here to teach you how to do these things. I'm going to explain a little as we go. I'm going to talk about some of the companies I used, and I'm going to talk about the total. All right, and it blew my mind. It literally blew my mind how much I was able to make. And I don't know that I will be able to recreate this every month. I caught the tail end of some earnings on this. I also sold 2 long puts and got paid very well for them for stocks I'm trying to buy. So that's another thing to think about. But I think when you look at the numbers overall, I think it's impressive, and anyone can do this on any size account. So what I want to do now is take you into the cover of her spreadsheet, and we'll talk about how much I made and what companies and how much I made off each. All right, now that we're in the cover sheet here, you can look right at the top and see my total profit for the month was $1,614. So $1,614 is nothing to shake a stick at. That's good money. Now, I want to say that probably 90% of the time, these trades were done sitting over coffee in the morning at market open with my wife. Now, we have seen this is so profitable that we have now opened Missy a Robinhood account, and she will also be doing options as well as a few other strategies we're going to work together on. But I started on May 7th and ended on June 7th, okay? Now, at the time of making this video, it's 2 days later. I do want to say that there have been multiple things happen here. I've done buybacks. I've let them just expire worthless. I've had some I've been assigned. I have used the wheel strategy to sell out of stuff I've gotten assigned and made a lot of money. Nothing did I lose money on. Nothing. And that's how you play it. People get afraid or worried and want to sell stuff, and then that's how you lose money. So the first one I want to talk about will be Acre and Arbor Realty. These are ones that I already owned. I am trying to get rid of the Acre, so selling covered calls on it, I wasn't too worried about anything other than trying to get rid of the shares. I'm trying to actually move out of that position. So I made $90 on those, and it's still out there making me money as I try and sell them. I do collect the dividends when I have them though. And the other one was Arbor, which that stock is getting shorted everywhere and is just getting all kinds of messed up. Their fundamentals are good as far as I can see. I don't really care if I sell it or keep it, but it was just a simple $5 trade on 100 shares. Now that doesn't seem like much, but percentages add up. You're going to see throughout this how little adds up to a lot. Now, the next one I want to talk about is Robinhood, the actual Hood stock. Now, I made 173 off this, but what I did was I set a strike price and it fell through the floor on a put. I mean, it just got obliterated and I thought, uh-oh. And then I turned around and sold a covered call on it at that price, which was $150 higher. Now, if you don't understand what I mean, in a contract, which is what you sell on these, a contract is 100 shares of any stock. All right? So you have to own 100 shares of any stock, or you have to be willing to buy 100 shares of any stock in order to deal with these options. So once I'd been assigned them and made that premium, I put them at the strike price of what I had in them. And it ended up hitting because Robinhood was doing a buyback on shares and the price skyrocketed the next week. So just in price appreciation, I made $150. And then I also got another premium for selling the covered call. So that's how the wheel strategy works. You sell puts on a stock, basically saying that if it hits below this price, I will buy it. If you ever get assigned, you take those stocks and you sell a covered call on them until they get called away, making sure that you're making some premium on the spread as well as the premium for selling the covered calls. So that trade came out amazing. It could have been bad. I could have had to buy more shares or put puts on more shares and keep collecting premium until I got more to sell it, but it actually just worked out perfect. Now, the next one is Beyond Meat. Now, I have done so much with Beyond Meat, to be honest with you. This is something that, you sell a contract for 100 shares, it's like $700. You're making $5 to $7. So you're making basically 1% a week. And I do weeklies on all these pretty much. So, you're making $7, you're making 1% a week. So around that, you're going to do 4% a month. You tell me what else gives you 4% a month. So Beyond has been great to us. Now, I wanted out of my Realty Income shares. The yield is just too low. It keeps bouncing up and down. It's not found its footing yet with investors again. I don't think, once again, the company's going to be making money hand over fist, especially as rates drop. But with our new strategy and what we're doing with our portfolio, I was willing to get out of it. And I basically sold a covered call on it for $5 and they got called away. So pretty simple. Now, my wife wanted to get in the game and she chose Ford and we did it on my account. And that thing was the biggest pain. It had a $9 or $10 premium to hold it for a week. And she ended up rolling it because it dropped. So by the time everything was said and done, we made $2 to buy it out just because I was done seeing it in my portfolio. And I don't think she'll ever trade Ford ever again. She kind of learned her lesson. Next one is my problem child. So I sold a put on DraftKings right by earnings and made a buttload of money. All right. And I am still trying to recover from that. So I got assigned and then I put a put in to get assigned at a lower price and it just keeps dropping. Now, I just got assigned a third time this week before we ended. So I'm holding 300 shares. And it looks like when I go to sell, I'm going to make a tidy profit next week. But if you're going to mess with this, DraftKings wouldn't be one I would mess with. The volatility is insane. It literally bounces around like a ping pong ball. If that's what you like, you can make some nice premium. But just let you know, I made $3 off that. So I've got no real complaints. MPW. Oh yeah, medical properties. We all know what kind of shape this company's in. Stewart Health not paying basically 15%, let's say, of their money not coming in anymore. Their property's just sitting. But they are on it. They're turning the company around. They are selling stuff. They are getting it back together. They brought their dividend down some to a reasonable rate they could afford. The books look good, but the company's still stuck down there by that $5 price. So this is a cheap one to get into. And if you're holding it when they pay their dividend, you get that too. So you kind of can't lose. And I've been playing it on just getting like 0.5% or 1% a week, depending on what it is. I may get $3, I may get $5 to sell puts on it. But I just keep getting that premium. And like I said, when you do the math out, if you're getting 2 to 4% a month over 12 months, you're making 20, 24%. That's amazing. That's a great return. So really, I think Medical Properties Trust is an excellent one. Now here's where we get into some of the more dangerous ones. TQQQ, that's a leveraged ETF, and I've made $57 off of it. Now I've only messed with it twice, and they both were extremely short terms. In other words, the value as it climbed allowed me to buy it out at a very low price. So it was basically like flipping it. I buy it on a Monday, and by Wednesday, the put is basically worthless. So I buy it back for $1 or $2, and I get to keep all the other premium. It's a nice way to play it. But the same way with Soxl, SOXL, I made $150 on that, and I played that the exact same way. I look for it to about to turn and run up the hill, and I just put it in on Monday, and by about Wednesday or Thursday, I can buy it out. Now, when I say buy it out, I mean, the longer it goes, it seems like the better it could be. So if you sold monthlies, you probably could be buying out in a week or two in a lot of these and making really good money. I just like the ability to flip through the week. I make slightly more percentage, but I don't know if it's enough to really be worth it. So next is Coney. And what I did was I want 200 shares of Coney for my portfolio. So I got $440 for selling two different longer term puts. One ends at the beginning of July and one ends at the middle of July. And both of them paid me well. Like I said, I got $440 just in premium, and the strike prices are below right now. So I may not end up getting them, but I made $440. So if I don't get them, the $440 off the share price that I'm going to pay is still going to bring my cost basis way below what it is now. Now, another thing about Coney that nobody talks about, and it's not a huge amount of money, guys, but it has like an 80% yield, I would say. But you can also sell covered calls on it and cream off like, I don't know, $5 on a $20-some stock every week, or even every month, depending upon what the numbers look like. That may not seem like much, but when you're holding the stocks to get the income from them and then you're getting an extra $5, $10, a month off of it, that adds up quick. And a lot of people don't realize that, but when you're looking at these numbers, there's plenty of these stocks I was only making $5 to $7 off of, and you see the total, how it came up. Now, next is AAP, which was $50. Chewy, $28. That one is volatile. You would not think it is, but it is. Okay, we're talking volatility. Here we go. You want to get a play on Tesla for a low price, so you have a small account? TSLL. Oh my gosh. And it rides just like Tesla, let me tell you. You better hang on for this trip. I ran it once, and I made 1%, and I was done. I'm like, nope, I'm good. That thing was literally a ping pong ball. I just stopped looking at my phone. I'm like, if I get assigned, I'll just roll it, wheel strategy, and we'll just keep going. I'm not even going to look at my phone no more. And that's how Tesla is all the time. That's why I don't like Tesla plays, because it's too much to have to deal with. There is lots of money to be made, but you can also get assigned a lot. So the next one is actually one of my favorites. It's not easy to play, but there's plenty of premium baked into it, and that's Cava. Now, for those of you who don't know, CAVA is a restaurant, is my understanding. And a lot of people compare it to Chipotle, which we have here. But it's different food. I'm just saying the kind of fresher, healthier, prepared market of faster food. So my understanding is that they are big out west, but the reality is they have beautiful premium, they have good financial numbers, and they move up the hill pretty much most of the time. So you can sell puts and just make cash. Now it is a little more expensive. It floats around like $100 a share at the time of filming this. So you would have to have a decent chunk of cash to be able to do this. But I pulled $101 in premium off of it and loved it. Now, American Airlines, another ping pong ball in my opinion. I made $12 off of it. I'm holding the shares because I got assigned. It literally hit the exact strike price, like even. So, I'm holding it, but I'll be able to roll it next week. I'll get 50 cents a share, which will give me $50 and a premium. And if it doesn't hit, then I'll just take my premium and roll it again. And sooner or later, I'll get that 50 or $100, on top of whatever premium I got. Next one is Hims. Now, I actually got like $5 in this, but I ended up buying it back just to get it off the books. So, you make $3. It doesn't seem like much, but it adds up. And then TNA. Now, I like TNA because it doesn't have a whole lot of maintenance requirement. And I made $63, and that's with multiple buybacks even. So it was a great play. Now, there's a lot to talk about and unpack in this whole thing, but let's hear from our sponsor.
So for those of you who don't know, Connecten is a wireless internet provider that uses all three of the top major networks in the USA. That means AT&T, T-Mobile, Verizon. So you have the ability to have the best service wherever you are. Now, in our home, we use it to stream, we use it to upload our YouTube videos, and do all the normal things you would do in your home. But Connecten doesn't stop there because they have amazing equipment and it's a low power draw. Why that matters? Well, because for one, we're taking our tiny house off grid here. So power does matter in our future buildup, which is one of the reasons we chose them. The other is that we travel a lot. We like to go out on the road. And when we're out on the road, a simple power inverter that plugs into your cigarette lighter, very, very low wattage, usually around $20, can be had that you plug the unit into, and as you're going down the road, you've got power. Now, not only that, but we like to go places that there is no power or that the internet is no good. For example, have you ever used internet in a campground? They're always terrible, especially at night when everybody's trying to use it. Why not bring your own? Can your home internet do that? And with plans starting at a simple $69 a month, how can you go wrong? Think about it. You're saying, oh, I have T-Mobile home internet or I have Verizon home internet for this price. But what happens when there's too many people on that network? Are they going to let you change from T-Mobile to Verizon, from Verizon to AT&T? No, that's where Connecten comes in line. If you are van life, if you are traveling, if you're a person that wants to have internet no matter where you go, Connecten is for you. And with that said, I will put all the information in the description box below so you can go check it out for yourself. Now back to the video.
All right, so let's unpack how this all transpired. This is 30 days and it is recreatable, but I want you guys to understand that you can do this two ways. And I would suggest starting small and doing it cash secured. What that means is, let's say you were going to use Robinhood, okay? They have the Robinhood Gold for $5 a month, and you get 5% on your money right now. So if you put the cash in their money market, which is 5% basically, then they will let you sell covered calls against that money, all right? So it's collateralized, which means you can't take it out until the options trade is dealt with. And if you get assigned, they'll pull it from that money. But if it rolls, they'll just add the premium to it. But the whole time, you're still collecting interest. So that's one way to do it. Now, the other way to do it is the way that I did it. I don't suggest this, but you can do it. And that is doing it on margin. I have Robinhood Gold. So for that same $5 a month that I spend, I also get $1,000 of free margin. Now, I have a $50,000 account there, so technically they would give me, with my investments, probably about $42,000 worth of margin. Now, I would not use that much. I would never want to exceed 30 to 50% of my margin. It's just dangerous. Don't do it. But what I did was I sold on margin to cover any of these, if I were to get assigned or just to collateralize. And what you need to understand about that is I'm not getting charged margin maintenance. Even if I go above that $1,000, I'm not getting charged until I get assigned and actually have to buy the shares. So if you're doing the wheel strategy, let's say you get assigned and then you end up having to pay, some margin because you got assigned. Well, if you roll it in a week or two, you're only paying that margin on that one little bit for a week or two. So it's really not going to be that much considering their margin rate is only like 5 or 6% a year. So realistically, I'm not paying anything. I'm playing with other people's money, but my account's big enough that if anything ever happened, it could be handled. And I also have cash on the sideline that I could throw in at a moment's notice if I wanted to. I just don't feel that I need to because of the situation I was in, and I wanted to give myself a leeway. So you could do the math however you want. You could say that I'm allowed to use $25,000 worth of margin, let's say, and I just made in 1 month $1,600. Do the percentages on that. Now, I didn't use that much, but you could say that. Now, Missy's building up her own account. She's going to start running numbers. We will do the his versus hers kind of thing and see based on the percentage size of our portfolios, who's doing what. We are leaning to build her portfolio up so she can do more. We also want to try out some different strategies, like going in hard at the money and doing wheel strategies. We also want to do a test on using the income funds to do dividend capture strategy. Essentially going in and buying the day before ex-dividend date, letting it roll out till price recovery is as close as possible, and then jumping into another right before ex-dividend date and rolling that throughout the month just to see what we can do. The paperwork on it using regular dividend stocks, it doesn't work because the share price drops the equivalent to your dividends. You're just breaking even. But with newer income funds, things change, times change. We like to give that a shot. But if I'm gonna tell you guys, is options a good option for side hustle? I think it is. I think you need to educate yourself. I think if I was going to give anyone advice, which is not a financial advice, just what I do, is I would say learn about Delta, learn about percentages. Robinhood makes it very easy for you because they convert the Delta to percentages. And everything below a 20% delta, you're getting in the safe zone. You're not safe, but you're getting in the safe zone. So the lower delta you can do, the better. And then on the percentage side, which is what Robinhood, everything 80% and up. Especially if you can get up to almost 90 and accept making a little less money, you're probably going to end up making more money in the long run without being assigned. And that's the trick. Don't get greedy. The moment you start getting greedy is when you start getting assigned a bunch of shares, or you start having to sell shares at an upward point and not getting out of the positions. You know, you may have a lot of people that lose money in options is because they sell lower than their cost basis just trying to get out. And that is where you lose money. On the other side, where most people lose money on options is being a buyer. Never buy, always sell. There's strategies that may work another way, and somebody's going to step up and be like, you should do this. You want to be safe, sell puts. Just work on selling puts to get started. But if you go to YouTube, put in selling puts, selling calls, and the wheel strategy, you will learn everything you need to know. There's plenty of forums, there's Reddit, there's plenty of groups on Facebook. I'm a part of a lot of really good groups on Facebook. Just don't pay somebody to teach you how to do this because you don't need that. Now, if I was to give you any advice when doing this, go slow. Do it cash secured. Don't use margin. Go slow. After you get good at it, then maybe you can look into, using the house money to do things. But realistically, if you go in and buy 100 shares of a stock you want or already have and want to sell covered calls on it, that's probably a pretty good way to start. Because really you should be buying stocks here, putting puts in on stocks that you actually want to own. There is a lot of these plays you'll see in here that I'm just doing it just to make the premium, to make the money. This whole thing is about cash flow. And basically it's a side job. I probably spend an hour, maybe 2 a day. If I'm being honest, and that's just because I'm really interested in it. I probably could spend about 20 minutes and be done a day. You peek at your phone, see if you can buy out of something at lunchtime and at, right before market close at like 3. That's it. I sit around with coffee and me and my wife just talk about companies. That's why we invest so much time in it, because we're just hanging out, enjoying each other, and talking about something that we're both interested in. And it does give you something to get up and look forward to in the morning. It really does. Monday morning is a pretty cool time around our house because we're all talking about how excited we are about what we're going to put in, what we plan throughout the weekend, what we're going to sell puts on, what we're going to roll, etc. It's a pretty cool feeling. And I think that a lot of you that want to make some extra cash, and you hear everybody all the time looking for side hustles, how can I work from home? This is a good way. I'll be honest. I spent a long time saying I don't want to mess with options. I don't need to learn anything else. My brain's already full. I regret that every day. You know how much money I could have been making this whole time? So do yourself a favor and at least give it a shot. It may not be for you. Now, I'm going to end this video by telling you that if you feel that this is too overwhelming for you, if you feel like you don't have the bandwidth to go learn this, I would tell you to rethink that 2 or 3 times before you make that final decision. But if you absolutely cannot, there are ETFs now that will do this for you. Unfortunately, some of them are not real good. Some of them have high payouts, but their share price is just running to the ground. So I'm going to throw out 4 names real quick with the tickers. And then I think that if you don't want to do this, you can go invest your money in them, and monthly they'll kick out option premium to you without too much of a destroying NAV. So the first one, of course, is JEPI, J-E-P-I. And the second one is its sister fund, JEPQ. One has about a 7.5%, one has a 9% yield. So break that down into monthly and you'll know what your payment's going to be. But they're safe and their price has been steadily going up. So pretty safe investments. So the next 2 I'm going to put out is QQQI, SPYI. All right, those are by Neos. They have a slightly higher dividend yield or distribution yield, whatever term you want to use. And they do go uphill currently. Markets could turn, but I would say they're a much safer investment than some of the other things out on the market. And that's what I would like to steer you guys to if you're just learning about covered calls or covered call ETFs, is the safer models. Then you can decide for yourself what you want to go that's a little more aggressive. So I hope you guys found some of this helpful. I hope this opened your mind up to options and how they are not as complicated or scary or dangerous as people try and make them. The hedge funds and commercial Wall Street money has been using these for years. They're probably not exactly happy that all of us retail traders are getting into it. And you really can be non-aggressive on this, but make a lot of cash on this. You have to be thoughtful, careful. You're not going to win them all. But if you stay to the selling side and stay under that 20 delta, you're going to win a lot more than you're going to lose. I can guarantee you that. So with that said, if you haven't already, and I don't know why you wouldn't have by now, guys, come on, go down, hit subscribe, hit the notification bell so you see all of our upcoming videos. Leave us a like. Let us know in the comments what else you would like to know about this. I might make a tutorial longer into the future, but for right now, I'm just going to leave it at this. I will ask Missy to make a video about the full spreadsheet setup she is, because you're going to want to track your money doing this. And she found a spreadsheet online, and then she built that cover sheet you guys saw. And it just works great. It's on Google Sheets. It's just amazing. It's easy. Basically, right before the market opens, she flips it open on the tablet, punches in everything that happened the day before, and it just populates, and we go into our next day trades. It's so easy. So I will ask her to make that video for you guys coming soon. But if there's anything else you have questions about any of this, go down in the comments. I'll do my best to answer them for you. And with that said, I'll see you guys in the next one.